Is the Chancellor going to tax your ISA? Interesting question. There's a lot of buzz about it in the media at the moment. And before I go and update my Vanguard account and show you where I'm sitting, I'm going to kind of answer it from my own perspective. Now, in the Telegraph this week, it was stated that the Chancellor is going to put a 22% levy on cash held inside a stocks and shares ISA. Now, what that's really doing is kind of closing a loophole. Now, this, and I must stress at this moment in time, it's not locked in stone. We don't know. It's just newspaper speculation. But it does raise a question, because what you often see in the media world is plans that are going to be implemented are often kind of leaked to the press, and then they run various different stories, and then whenever a budget comes or it's put to Parliament, it doesn't sound as bad because you already knew about it. And they'll also gauge public reaction to it as well. We've seen this many, many times over the years. But this one's quite a big one. But I don't think it's as bad as what's being bandied around. Because if you're with various providers, I mean, and there's plenty of them, and you're holding your stocks and shares ISA, they also pay you a percentage for the amount of cash that you have in that ISA. Now, one thing that is coming in is there's going to be a reduction in the amount of cash you can have tax-free. Now, that's reducing from the current tariff of 20,000 down to 12,000 April 27. Now, if you're over 65, it doesn't apply. This is for under 65s. Now, the idea is you can still have 20,000, but you'll have 12,000 cash, and you'll put 8,000 into stocks and shares if you want to use the full allowance. Now, the loophole is, well, you can put your 12,000 into a cash ISA, and you get whatever the rates are. The rates are not that great at the moment, in fairness. You maybe get 1 or 2%. Some are a bit better, some are a bit worse. They vary through time. Now, what you could do is go, well, I'll put my 12,000 into the cash ISA, even if you get, say, a wonderful rate of 3% just as a round figure. And you see your stocks and shares ISA is also giving you 3% for the cash that you hold inside it. Well, you could put the 8,000 into the cash section of that stocks and shares ISA and not do anything with it. Just leave it there. So essentially what it becomes is a cash ISA. Now, what they're doing, or what the criteria is they'll kind of close that loophole by only taxing the cash element. And that's my read on it anyway. I'd be interested in your thoughts as to what you think they might be doing. It's like most things. A lot of the time the newspapers will over-speculate and they'll sensationalise things. But I can see what they're trying to do. Now, I'm no fan of our government. I mean, that's pretty well known. I think they are useless. And the Chancellor has the financial acumen of a crackhead with a payday loan. I don't think she knows what she's doing. But on this instance, I think if they're going down that route and they're trying to make it fair, that is a way of doing it. Okay? So you know exactly where the goalposts are. But it's horses for courses, guys. Ultimately, once it's in stone, there's not a lot us mere mortals can do about it. We've just got to abide by the rules and find the best deal for ourselves. So let's have a quick look, see where I'm up to, what I've been doing. I've done quite well work-wise this last month. So next month I'll be boosting this up quite considerably. Let's have a quick look at it, shall we? So just bear with me while I slog in. There we go. So we're doing quite well. We're up to 205,601.62. My equity curve is still pushing forward tremendously. I'm really happy with that. And the investments are generating a decent income over the last rolling year. In fact, they've generated £40,000. So, Scruff's happy boy. Scruff is definitely happy boy. Transactions-wise, it's all the same. There's little transactions all the time. Bish, bash, bosh. You know, just drip feed into it over and over. And that's the beauty of these things. If you drip feed into them, they don't half pay off. Now, investment-wise, I keep it roughly the same. Okay? So, I'm still using the all caps. That's all I'm really interested in. So, the worldwide funds, I'm not trying to pick shares or anything. And I don't keep a lot of cash in my stocks and shares. So, if this comes into play, well, I'm not really making anything off it. So, it's not really accounting for anything. Because I put everything in here. I get the money in and I make it work for me. And the state of play, if I just pull up this, will show you. There you go. So the ISA is currently sitting at just a shade under 60,000. There's 59,731 in it. The standard account is a taxable account. It's just because I fill up my ISA most years, or I try to, and then I put it into a standard account. The pension side of it is doing incredibly well. And then the extra is quite simple. It's, let me just get out of that. The extra bit is quite simple. What that was for is to see what 25 quid a month on a direct debit would generate. Well, this started on the 1st and it's ticking along quite well. In fact, it's ticking really well. So I'm happy with everything that's in there. And from the last data point that I put in, which was the 22nd of May, because I do this every Friday, it's grown this week 1.7, which is an increase of, well, it's a phenomenal increase. It's the thick end of $3,500. It's not bad for a week, is it? But what you got to remember is the week prior, it actually lost money. So you can't always take it sort of, this is going to be good all the time. It will have peaks and troughs. And some weeks that's going to hit and that will be darn nasty. In fact, that could be down massively. Let me kind of show you where we at. So if I go to performance month, there we go. There we go. So the month of March, it was down 10,000 quid. Fucking shitload of money. And a lot of people would freak at that. But because this is a long-term investment, it's just part of the course. And as you can see, it doesn't always hit the mark. It's just doing very well at the moment. Now down here, again, lost 10 grand over 3 months. But you just keep building it and building it. So there you go, April 25, roughly about a year ago, the fund was 106, but I didn't panic. I kept it going and it's done, or it's grown 100,000 near enough over the course of the year. Yes, I've put money into it, but it has substantially increased, including the asset return, which is this. So there you go. Happy days. So that's it. There's a quick update for you. I do cherish your thoughts. Do drop them in. I answer every single one of them. And if you like this sort of thing, click the subscribe button. Really helps hype the channel. And I'll keep on pumping them out. So as always, guys, trade well, keep your risk managed. But above all, do what you love. And the money will follow. See you all in the next one.